Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SKEW's Options Institute, and it's Tuesday, June 22nd. Now yesterday, the S&P 500 index ripped higher, closing up 1.44% and recouping the Friday weakness. Yesterday, the VIX index declined from over 20 to below 18, and as I sit here, the VIX index is measuring right around 1750. Now, the 30-day at-the-money SPX options are trading on about 13% implied volatility. SKEW's SKEW index, which I mentioned last week, remains elevated. In effect, the options market continues to price in the potential for larger deviations in the S&P 500. Friday and Monday were very active from an SPX options perspective. Today, the market could be driven by Fed Chair Jerome Powell's testimony following last week's FOMC meeting. Now, the central bank arguably expressed a greater degree of concern about inflationary pressures, but there was no specific intent to slow their asset purchase program. The 10-year yield in the U.S. has been moving right around 1.5%. The S&P 500 index is chopping around unchanged as I sit here. Shifting our focus to options on VIX, the standard August 15 strike puts traded for 24 cents, and that went up about 10,000 times. Also, the September 25 and 35 strike calls are trading actively. While they didn't hit the tape as a spread, more than 10,000 of each of those series have traded thus far today. That 10-point wide spread is worth about $1.45 as I sit here, with September futures just over 22. Now that month one, month two VIX future spread is back out to $1.50 wide after settling at 85 cents wide on Friday. So we'll see what Powell has to say to Congress and how the broad market and volatility markets react. There's just over a week left in the second quarter, which can bring about some flow changes. So never a dull moment. That's Volatility 411. Thank you very much for tuning in.